Good evening, everyone. Welcome to Ask Grit episode number 30. Today we have Tony from our Colombo office. Hi, Tony.
Hello, Navin. How you doing? Good to be back on the
Excellent.
show.
Excellent. I'm doing very well.
So, Navin, I believe talking about the market, it's pretty much a buyer's market still in Australia when it comes to the real estate. Is that right, Navin? Any comments on that?
The market is pretty hot. Investors are flocking in. At the same time, it is a seller's market on the established front because you get the maximum amount for your property when you're on the secondary market. But at the same time, buyers are flocking in, especially investors. The first home buyers had a pretty good run for the past 6 months. Now the investors are flocking in. Yeah, so the market is continuing to be extremely hot.
Excellent. That's great news, ladies and gentlemen. So I do have a set of concerns, I would say, Navin, which my foreign investors mostly discuss with me on frequent basis, Navin. Okay. Now, the first question I have for you is, as we have seen a substantial gains, capital gains for the last year in most of the cities in Australia, Navin, do you reckon the good run will continue just like you just mentioned?
Yeah, I think it will. Simply because the fundamentals are pretty strong still. The interest rates are extremely low. The cash rate is at 0.1%, which is all-time low. And APRA, which is the regulatory authority, is tightening the screws a little bit. So market should taper down a little bit, but I think the growth will continue for at least for the next 12 months or so. And especially lockdowns are easing out in Sydney and Melbourne. And there's a talk that international students will start coming in starting December, January, and there'll be whole dynamics will change when that happens because the rental market will go up. And again, because all this is happening through the local market. There are overseas investors coming in, but there's not a heavy influx of overseas investors. So I think it will continue, especially when the borders open up.
Okay, actually, you already answered my next two questions because I was about to ask you the driving factors if you were to see it as a continuation of a good run. So again, other than if I get you right, you are talking about the all-time low interest rate to sort of carry on, and then population growth, student migration, and then any major factors which could impact the market over the next mid to the long term, Navin? Anything else?
Yes. And the other thing is interest rates are pretty low, right? And it's local, you can borrow at about between 2 and 3%. And that's one of the main driving factors because the money is cheap when you borrow. And the population will be growing in the next year for sure. There'll be a lot of overseas migration, which is continue to happening. And then student migration will continue. There will be population growth as well as interest rates are pretty low. When these happens, the market will continue to grow. We have had phenomenal growth across all cities of Australia, and that might come down a little bit. If it was growing at 15%, it might come down to about 8 to 9%, but the growth will continue until the interest rate starts going up.
Brilliant. That's excellent news. Now definitely the factors that you mentioned would make a strong impact, the population growth factor plus the student migration factor on the rental yields. Now, if we were to assume your statement is absolutely accurate, where do you think will have the best rental yields? Because now Canberra is the hottest place at this very moment. Do you see a similar impact in terms of people moving in and say big companies moving in that way? You will have employers moving in, which will eventually impact on the population growth. And then with the low availability of units, in particular when it comes to apartment, Do you reckon Canberra even will take off over 7%? What's your comments on this?
I mean, right now, as of right now, for the past 12 months, if you look at the past 12 months, Canberra has the highest rental yield across Australia. When you compare it with all the cities such as Melbourne, Sydney, Brisbane, Adelaide, Perth, Canberra is the highest rental yield. And with the student population coming in, especially the apartment market close to the universities, the rental yields will definitely go up. So to answer the question, short answer is definitely yes. So, I mean, now you're looking at about 6% rental yield in Canberra. It can very well go up to 7% when the demand is high.
Excellent. Now my next question, Navin, now, according to the information you have given me, do you foresee a correction in the market? Because now a correction and your information does not go along. So do you possibly see a correction in the market over the next, say, after the next midterm? What's your comments on
for
it?
sure. I mean, in every, it's a property cycle, which goes on. And now we are on the way, we are going up, and there'll definitely be a correction. And when I say correction, it's not going to be a crash, but it'll be, the property prices will start to get stagnated after some time, when the economy is at the rate, when the inflation is at the right rate, when the unemployment is at the right rate. Reserve banks will lift up the rates at some point, and there will be a correction for sure. Difficult to predict when, but I would say between the next 12 to 18 months, there will definitely be a correction to the market.
Now, when you are talking about a correction, now if the population were to pick up again, and definitely when it comes to the house and land markets now in Australia, you have undersupply, right, of dwellings against the population increment, or rather the demand that the locals as well as the foreigners would have when it comes to house and land. So even do you foresee a correction in the house and land markets as well?
Yeah, it will be a correction in the whole of, I mean, house and land as well as apartments. Because, I mean, the market will be driven by the fundamentals. I mean, when if there is an interest rate hike at some point, let's say it won't happen according to the chief economists which we speak to, it won't happen in the next 3 years. But if the economy gets corrected, if all the fundamentals are right, there is a possibility that the interest rates can go up. And the moment this happens, there will be a correction. It will be in house and land as well as apartment space.
Brilliant. So interest rate would be one of the factors which will play a key role as per your information. Now, talking about Canberra now, with the scarcity of lands right now in Canberra, would you see a similar capital appreciation over 10%, just like year on year? If we were to take the last year, say do you reckon the same run will continue when it comes to Canberra apartment markets over the next term to the long term?
Yeah, no, probably not at 10%, because the population, it will really depend on the population growth, although there's a scarcity of lands, because Canberra is a small city. The population growth will be much higher in Melbourne or Sydney as well as Brisbane, because right now the highest population growth for the past 12 months has been in Brisbane, because a lot of people have moved in there because there's no lockdowns there. But when it comes to overseas migration, Melbourne will have the most number of people coming in. Canberra, the population will still be rising. I mean, we are looking at about 600, 700,000 people in Canberra, whereas 5.5 to 6 million people in Victoria. So population growth will be not as high as Melbourne, but being the city of that size, there's going to be still a significant contribution in population there.
Fine, excellent. Navin, now talking about Canberra once more, Canberra alone, do you see any particular unique fundamentals in terms of Canberra seeing an upside potential on capital gains as well as on rental yields once more? I mean, I know that you commonly spoke about certain factors when it comes to Australia as a whole, mentioning Sydney, Brisbane, and Melbourne. But Canberra alone, do you see any unique fundamentals which could drive an upside potential on capital gains as well as on rental yields?
Yeah, I mean, if you look at Canberra, if you look at the houses in Canberra, house prices, you're looking at 1.5 to $2.5 million to start off with. And if you look at the unit prices for two bidders, you're looking at about 500,000 to 550. So the house prices is never going to come down. So the gap between the unit and the house prices is so huge. And I mean, if you're going to bridge this gap, the apartments has to go up. So that's a unique opportunity in Canberra right now, because the gap between apartment price and a house price is quite massive, close to $1 million. And the gap will definitely come down, whereby it's not the house prices coming down, but apartment prices will go up.
Brilliant. That's good news for some of our investors that who are already in with apartments. Now, lately, I just came across now in has the rules on income taxes been changed in a manner where the foreigners will be taxed on their net income, after the deductions per annum, even when they invest leveraging on a mortgage?
No, there's no change. I mean, income, especially as a foreigner, if they go for a mortgage, they will not be paying income tax, because, I mean, after paying a mortgage, even if they get a Canberra is a different story, they might get a good positive cash flow. Even if you get $1,000 a month net, you're still looking at about $12,000. So you're way below the threshold of 18,000, and you will not be charged income tax. So there's no change into the rules. There are certain thresholds for each payment bracket, and when you're not earning here, there's no change in income tax right now.
Just to confirm once more, so as long as you're within the brackets, or if you have not exceeded the brackets, you will not be taxed. Yeah. Meaning, even if you have made, let's say, $5,000, or let's say $10,000, which is lower than the first bracket of income taxes, yeah, you will not be charged any income tax on that $10,000.
Correct.
Simple, right? Okay. Yeah. So if the market as a whole were to be stagnated over the next midterm, with unique economic fundamentals and scarcity of lands in Canberra, will allow investors to sit on sound capital gains and rental yields, investing in apartments. Once more, I mean, what I'm trying to say here is in apartment, when you invest as an investor in Canberra in apartments, do you see any further unique economic fundamentals which could help to drive their profit taking if they do that? The investors do invest in.
I mean, the markets will go up and down, and there'll be corrections, there'll be booms, and that's quite normal. And it has been happening for the past 50 years in Australia, and that will continue to be based on the economic fundamentals. But the key thing to know is, I mean, as an investor, if you hold on to your property for as long as you can, you're never going to lose out. And if it's in the right location, if it's the right property, if it's close to all the amenities, and as long as you're never without a tenant, without any rental income, your investment will continue to grow. You'll continue to get passive income, continue to pay off your mortgage on time. And I mean, as long as you keep renting, and then the capital appreciation will take care of itself over time. There's no right or wrong time to invest. Time to invest is right now.
Brilliant. And from today's rental yields in cities like Melbourne and Sydney being, say, anywhere between 4.5 to 5, do you see with the statement that you made on the migration happening, the population increasing, and all that things happening over the next midterm, do you possibly see rental yields moving up to about 6%, even in places like Melbourne, what's your comment on it?
No, I mean, Melbourne, if you look at it, the rental yields are around 3% right now. It's not even 4. I mean, Melbourne has been in lockdown for the past, I don't know, 240 days or so. So that has a huge effect on rentals, and rentals have dramatically come down, especially in the city, inner city. But things will definitely change, and it'll change dramatically when now that the lockdowns have been eased as of today, and people will start moving in, students will start coming in, and things will get back to normal in the next 3 to 4 months. And then it will definitely go up to where it was, which is between 4 to 5%. I really don't think it will go up to 6% in such a short period of time, but it will be around 4 to 5% mark in Melbourne and Sydney.
And how about the house and lands in the closer suburbs, let's say 30 minutes away?
Yeah, I mean, house and lands have been renting out pretty well, even during the pandemic. The rentals will be between 4 to 4.5%.
Okay. Now, do you also foresee any particular cities or any other jurisdictions as best places to invest for foreign investors, along with Canberra at a time of a correction? If we were to see a stagnation of prices or whatsoever, let's call it a correction. Do you advise any particular cities for foreign investors to be picking up or sort of parking their funds on?
No, it really depends on the time of the market you invest in. And I mean, at each state will have its own property cycle. And I mean, right now it's a crazy situation where all the markets have gone up in all states. But let's say 12 to 18 months down the line, you have to wait and see what happens. But depending on that, and depending on the investors' circumstances, their budget, their appetite, their future plans, then we can propose the best location during that time. I mean, even places like Adelaide or Perth has been growing phenomenally well, and the rental yields have been going up. So it really depends on the objective of the client, what they want to achieve, how long they want to invest, and the time they want to get in. And then we can advise accordingly.
Brilliant, brilliant. Now, my final question to you today is, if a foreign investor were to hold his investment for more than 1 year after the completion of the property, and in the event of exiting, is he eligible for 50% of deductions on his CGT, on his capital gains?
No, capital gains, no. He as a foreigner, he won't be. But as a local, the moment you exceed 12 months, you get 50% off your CGT. But it doesn't apply for foreigners, unfortunately.
Okay, so you mean to say the foreigners will continue to pay as per their capital gain brackets?
Correct.
And what are the starting brackets right now? Roughly the first and the second category, roughly with percentages. Now, if you
I mean they'll start from they will pay from 15 to 32%, somewhere there, based on the
starting point is 15%.
We have had another question online. For the past 12 months, where do you get the highest rental yield, and where do you get the lowest rental yield in Australia? It's a great question. I think we touched upon that briefly. So the highest rental yield for the past 12 months has been in Canberra. Canberra has been outperforming every state consistently. So Canberra is highest performing. Lowest performing was Melbourne. A lot of people will get surprised by that, but that's the reality. Melbourne has been hit by a lot of lockdowns. Over 240 or 50 days for the last year has been on lockdown. That's a ripple effect of that, obviously. But don't underestimate Melbourne, because they'll bounce back pretty strongly, because I mean there's so much of students who are outside. They'll be coming back next year, and it'll be a whole different ball game altogether, and as well as the migration population. When the borders are open, it's going to be a whole different ball game altogether. So if you're looking at investing in Melbourne, it's definitely the correct time, because there'll be a lot of population growth in 2022, 2023.
Good stuff.
Right.
Good stuff. So I'm done with my concerns, Navin. I'm happy with your answer, and I'm glad that I had the chance to talk about it, and I made my mind clear too. So
Excellent. So just to recap, we do this program every single week. The objective of the program is to answer any questions from our own investors so that it'll add value to you and it'll clear some of your doubts which you have been thinking. And that's the whole purpose of this live stream which we do every week with our own teammate. And we will be holding webinars for local investors in Australia as well as overseas investors every other week. The next webinar is for people in Sydney, focused at Sydney. That's going to be at 7 p.m. on Thursday, which is next week. So if you're interested in looking at some strategies to invest as a local investor, that will be a really good forum to be on. About 50 minutes to 1 hour. We'll be answering any questions you might have, but we are covering a lot of really useful content and some strategies which you can take away. So please join in if you're into that. And then we will also be having webinars for overseas investors to talk about some strategies which you can use as a foreign investor and how you can do it. Don't forget those. Watch our social media channels. You can't miss those because we are all over it. All right, with that, I think we're done for today, Tony. Thank you so much. Thank you so much.
Yes. See you, everyone. Have a good one. Bye-bye.